You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, friends. Today we are interviewing someone who needs no introduction, Mr. Vinney Chopra, known as Vinney Smiles Chopra. He's probably the happiest private equity syndicator I know on the planet. Good friend of mine, fantastic individual, and I cannot wait to introduce you to how many ventures this guy is involved in. He's an expert at putting the best who's in place and finding value in times of turmoil and in great success. So let's introduce Vinney to the show. We're going to talk about everything from real estate to the market today to even some of the newer techie type investments that are really starting to show their face as market leaders. So without further ado, here's Mr. Chopra. Here we go. All right. Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton, and we are powered by Quattro Capital on this episode today. Friends, I'm joined with a good friend of mine, the one, the only, Vinney Smiles Chopra. Vinney, welcome to the show. How are you, my friend, all the way from San Francisco?
I'm doing amazingly well. Thank you so much, Chad, and had the pleasure to meet you next door at Rupam's place, and we were just chatting about it. No, it's beautiful weather outside. I'm in the gazebo outside in the backyard and having my office here.
Yeah, all of you on YouTube will see this, but I have a fake background. I'm sitting behind some fake water, but Vinney is sitting in his beautiful backyard in Danville, California, gorgeous. Coincidentally, next door to two very good friends of mine. I was in town visiting some months ago, and in walks Vinney in the door, and was like, this is a small world, kind of funny, but oh, so great to meet you, my friend. So anyway, and by the way, a plug for the show. Vinney, do you remember what episode you and I talked on your show? If listeners
Oh my gosh, I should have looked at it. I know I don't number my shows, by the way, because there's so much every day is coming out now. So it was really getting harder. So please, look at it. Vinney Chopra and Chad, Sutton, and you will find it. It's on YouTube, it's on iTunes, everywhere.
That's right. We had a really good time talking on that show, and
Yes.
he was gracious enough to come over here. So just Google Vinney, Vinney Chopra, and Chad Sutton, and you'll find probably this episode and the other one as well. So, all right, folks. Well, before we get going here, I got to give a little plug. If you get any value out of this show, please scroll down, leave us a 5-star review and a very thoughtful comment. Folks, those ratings and comments are worth their weight in gold, and they're the only way that this show reaches more people and shares the wealth. You can follow us via our parent company on Instagram, Facebook, and LinkedIn at Team Quattro Capital, one word, no special characters, or by visiting us at thequattroway.com. We appreciate all of our listeners out there, and we'd love to hear from you. If you have any content requests, feedback, just want to say hello, drop us a note at podcast@thequattroway.com. And if you want to be on the show, please apply at thequattroway.com/podcast. All that will be in the show notes. Don't feel like you have to take notes here. So back to your regularly scheduled production here. Vinney, we have been in this market for a long time together. This is some chaos going on right now, if I do say so myself. We've had 375 basis point hikes in a row. It's like our 9th one this year or something like that.
Yeah.
Buyer and seller sentiment is very deviated. People are scared. Let's talk a little bit. First of all, what are you seeing out there, man? I mean, should we be hiding under a rock, or is the world ending? What's going on?
No. The world is not ending. Actually, we might see more economic downturns in the other parts of the world, but USA is the strongest position. I know the inflation kind of took off, with the gas prices and everything, and shortages and all that, to about 8.2 to 9%. And Fed has pumped so much money. We all know that, $3 trillion. So the inflation went out of hand. They are increasing interest rates to kind of curb that, bring it back. It might be a V, like going up, inverted V, we call it. interest rates may go high, and in about a year and a half, I think what I've been listening and all that, it'll be down. But remember, you and I, Chad, we were buying at 7%, brother. We were buying at 7.5%, 8%. We just got spoiled with 2%, 3% loans. So I am thinking that, we definitely should be in the market. The expectations of the sellers have to come down, including myself. I've sold a lot of properties at the peak, but the cap rate is going to increase. It has to increase with the buying power getting lesser and lesser. But there are amazing opportunities coming in the next 6 to 13, 16 months. I mean, there's some people who took the bridge loans and they cannot refinance into a final, what you call permanent debt and all that. So those people will be selling. Of course, institutions in the big, big numbers, we are not into that one. We are into 200 to 400 units in our case in purchases, 50 million to 100 million. But I'm talking about the lower end also. There'll be opportunities coming. And at the higher end also will be coming for you and I. So stay in the market. Stay in the market because the off-market deals come to those who are still squeezing. The squeeziest wheel gets the grease, I call it. And as a matter of fact, some of the brokers are calling back saying that, oh, the deal did not go through. Wait a minute. So there'll be a lot of those opportunities coming.
Man, I couldn't agree more. And so one thing you said right there, there's a lot of operators listening to us today looking for some guidance. Folks, stay in the market. You are always buying. If anyone asks, you are still buying. Now, the metrics which you buy might be a little bit different, and they have to be.
Yep.
But that's exactly it. Is we're seeing deals now come around, some of them for the third time this year. Some deals are coming back around because they needed to sell. And what are the only ways you get in trouble in real estate, Vinney? You run out of time or you run out of money, right? And
those
the biggest problem,
yep.
Two things are at pressure right now. If some operators didn't see inflated construction costs coming, and so you've been seeing a lot of deals, hey, 75% renovated, up for sale. Well, guess why? They ran out of money, right? But to finish their renovations, or you have bridge debt coming due. And so that means they're running out of time. And so a lot of sellers are just holding on right now, but the ones you see coming back down, they're realizing we're not at Disney World anymore of interest rates. We're not at Disney World of prices anymore. And so in the near term, we're going to see an expansion of cap rate. But let's talk about what you said with the inverted V. I want to unpack that a little bit. What does that mean, folks?
Sure.
I don't know about you, Vinny. I'd love to hear your opinion on this, but I am a student of the Fed and everything they've done since their inception in 1964. And I hope I quoted that right. Somebody please fact check me. But email me at podcast@thequattro with your complaint. But anyway, so if you think about this, if you go to fred.com and plot interest rate over time and just overlay recessions with them, you'll find that 100% of the time since the history of the Fed, within an average of 2 years and a max of 3 years from the first rate hike, which was in January, came the first rate cut. And so what Vinney is saying is we're seeing the interest rates climb as we're trying to accomplish the goal of mitigating inflation, right?
Yeah.
But this will probably continue for, another, 12 to 18 months until we get to that 2-year mark, at which point the Fed will cut rates to try to stimulate growth. Now, we may not go back to Disney World of 2% loans, but we'll probably be somewhere in the 4%. I don't know. What are your thoughts on that?
Yeah, it will never go back to 2%. I totally agree with you. We got spoiled. I mean, the problem was we did. Oh my gosh, last 12 years with the bull market in the stock market and the prices of the properties going through the roof, 40% appreciations in single family homes, even our home here, in Danville, Blackhawk. I mean, I couldn't believe in 3 years, it's gone double the price almost, whatever, 40% higher. But the thing is, and the expectations of the sellers kept on going higher and higher and higher. I mean, multifamily, look at how many people were bidding, overbidding stepping on everybody's toes. Those days will be gone, and all that frenzy, to I want to buy that property. Not only that, I want to say something else also. Chad, you probably heard it. Our young syndicators in the market grew up 1,000%. Hold on. These are new people who got to learn how to raise money, and they wanted to buy product. They kept on overbidding. So there will be some shakeout of those, I see also. But at the same token, it's like you got to marry the numbers. I always say that. Don't marry the buildings. You got to, expectations of the rent growth has to come down because of, those interests. I mean, the rents won't grow that much. And repositioning, like you just said, you said the right thing. The cost of material, the shortage of labor. I just came from my Hampton Manor in Virginia, Williamsburg, Virginia. I'm building, and our uh, the cost has gone up 25%. Construction cost.
Wow.
25%. So, and the shortage of labor and everything. I mean, I took videos over there with my contractor and all, but we are getting things, it's delayed. The process is delayed. And delayed means your more money gone away, right?
Yeah.
So that way. No, I totally agree what you're saying with the interest rates, and they will not go down to 2%. I mean, I'm selling my property in Austin at this time 2.89%. What? And now rates are 6%. So the buyers are definitely want to close on that, right?
Yeah.
Assumption of loan in
Yeah. I
this
think I
one.
was on
Yeah.
record saying this maybe a year ago. I was like, you're going to see a lot of deals in the next 2 to 3 years start to become assumption debt because, like, that's what's going to happen if rates go up. Oh, you have
Yeah.
how much money
Yeah.
at 2%, 3%? So that's
Yeah.
very good.
Yep.
But you said something very important there, folks. And, you know, it's kind of funny, but we're actually having to go back to fundamentals. We can't, the
Yeah.
market is not
Yeah.
going to be able to buy on pro forma and tomorrow's rent growth anymore.
Yeah.
You like at
Yeah.
best, bridge debt is running 7.5% before rate cap. I
Hmm.
think with the 10-year treasury move as of, we're talking early October right now, Fannie Freddie's at about 6%. So you're just going to
Yeah.
have to buy on in-place cash
Hmm.
flow, and that's going to deflate pricing in the near term. But to Vinny's point, you're probably going to have to assume that rental rates may not rise 30% in the first year. You're
Yeah.
probably going to have to
Hmm.
assume that things are going to take a little bit longer, and you just need to be looking for cash flow right now. That's the benefit of buying property. So Vinny,
So true. Uh-huh. Rupert, yeah.
as you're still moving through the market right now, what sort of deals are you doing? I know you've played in hotels a little bit. You're looking at maybe some
Hmm.
diversification. I mean, let's talk about that because there are opportunities out there.
Love to. Love to. There are
Where are you
lots
looking
of
right now?
great.
Yeah.
Sure, sure. Chad, I have also moved into senior assisted living. Some of the people know that, those are following me. But that's also multifamily senior assisted living has been a very good arm in the last 3 years that I'm into the building part of it and all that, which took a little shake up, with the interest rates hike and not only that, the shortage of material and labor, like I just mentioned, but I just purchased multifamily. We are doing extremely well. I want to say that I only bought one so far this year. See, the thing is, you got to slow down to speed up. I always say that. So you got to marry the numbers and the business plan. And the business plan, what you're going to do with the multifamily. So don't rush into something right away. But the other thing I'm going right now is hotels. Because of the COVID, there was a pretty big, steep valuation downward because the occupancy went down, for the hotels. And I love the mid-tier branded hotels like Marriott's, IHG, Intercontinental Group, and then Hyatt's, and then of course I'm thinking about Marriott and Hilton's, and so I'm lucky. The Wyndhams, the Holiday Inn Expresses, the extended care is another one on my radar. So I have gone into hotels 3 years back, 3.5 years back, and now I'm buying 4 hotels right now.
Wow.
Right now, Yeah, four of them. Actually, brother, I bought one just 3 weeks back from the bank. I paid 13.5. It's worth 19 million. 19 million. And we already knew that we're going to take out the payroll of X because 165 keys. And we also wanted to take the steakhouse or the restaurant, give it to another operator because we don't know how to run the restaurant. So anyway, those kind of just small business meetings has made it. And my partner and I signed an agreement with a broker to sell it at 25 million.
Wow.
So if we find something close to it, we'll sell it. But the hotels is a great, great avenue for everybody to look into, by the way. I look at hotels as multifamily because it's easy multifamily. The rooms are up there. People have to pay right at the counter to stay the night or 7 days or 10 days. So delinquency is zero and the rates go up and down, every day kind of thing. The other good part I like, and I might have mentioned when you and I met, is if we don't do syndication to raise money, but do like joint venture or member managed LLCs, then you could give active income losses to the investors.
Very interesting.
Yeah,
That's pretty good
interesting.
to know. And so, okay, so I have
Hmm.
several questions here.
Oh, please.
You have so many so many tricks that you're into. If we work backwards, the hotel side.
Mhm.
So you came out of multifamily and other assets and started buying hotels. So are you basically retaining Marriott in a triple net lease situation to operate the hotel for you, or are you actually managing and operating the hotel?
I
Sorry
love
about
it. I
that.
love it.
Or are
Very
you,
good question.
hold on. I got a
Uh,
phone ring. Let me
yeah.
do that again. So cutting that back in, guys.
Yeah.
So are you actually managing and operating the hotel, or are you retaining Marriott to do that for you?
Excellent, excellent. What is happening is there are certified operators of hotel management and doing all the things. So we have worked with one company. It's called GF Management Company and Hospitality. We love them. We love them. And they have been with us taking the Hilton Garden Inn, which we sold recently at double the price. So we have been working, managing the managers kind of thing. We cannot operate the hotel. You have to have background and certified personnel to manage them. So we work with the third party, give them 3%, or actually the new ones, we are paying 2.5% or
I
2.15%, I
see.
heard. And so that way we are managing weekly our partners who manage our hotels. That's how it is.
So this is very interesting. So basically, you have a branded hotel. So I assume that
Hmm.
means Marriott owns the franchise and will effectively take franchise fees. You then
Yes,
hire
they
a
will.
third party
Hmm.
manager, just like we would in multifamily, who is qualified and has the operational experience to
Yes.
run the show.
Totally,
You took the
totally.
restaurant out in this case and
Yeah,
put someone else who knows how. And then you're basically effectively behaving no different than you would be in your apartment syndications. You're managing
you
the
got
asset.
it. You
How
got
about
it.
that? How
Totally the
about that?
same. Totally the same. And they are the rooms with the keys.
It's
So
amazing how
I'm
you can draw
very,
these
very
parallels.
bullish,
Yeah,
very bullish on, hotels actually, to be truthful, because the prices are low and we know where to buy them and we are getting some off market deals through our contacts that we have built. Yeah, yeah. Thank you.
very
Yeah.
good, very good.
The other one, which I would love to say to your
Yeah,
audience and mine, you got to diversify. You got to look at different ways so that more passive income streams can come in. The other one, if you believe in the metaverse or the NFTs, I know NFT got a bad rap, but with the authenticity and having a physical product and the contracts, NFTs will be big coming up, and metaverse definitely. I'm so, so, so excited about it, where I invested into a kind of seed round with Meta. As you know, Facebook changed their name from, Facebook to Meta, META. That is the four letters of the metaverse. So Web3 technology and the experiential understanding, and on your laptop we'll be able to go to Rodeo Drive and Singapore's and all metaverses and try the product on us right there in 3D and be able to buy it right there to get it delivered. So that's the other space I'm really getting bigger. And that's when I'm going to Las Vegas these 4 or 5 days, leaving tomorrow, where we'll be dropping NFTs and also on the PGA tournament, and then also the metaverse. We'll be having discussions and meetings and all. Yeah.
Yeah, that's very interesting. And you gotta roll that back a little bit, Vinney, for, I'm going to tell you, I do not understand the metaverse, and I'm going to presume a lot of my audience doesn't either. What the heck is the metaverse? What are
Okay.
we trying to invest in here in the simplest terms possible?
The simplest term, as I understand it to everybody, is that it's 3D experience, experiential, and actually there is a ads coming out from Facebook, from Meta on television. I just saw it yesterday, and I doing my research, I find Facebook or Meta now is spending 15 to 20 billion dollars a year into this technology. So this is going to be the Web 3, not Web 2. Web 3 technology, just like the internet came, that's what it's going to change the whole perspective. And through holographic images and everything, we'll be able to experience the world sitting in our home. So it's a metaverse universe with a meta in it, which is experiential in a simple term.
Very interesting. This is an interesting time because, much like,
Mhm.
cryptocurrency in its infancy, it's the opportunity to invest in something that not people understand. And sometimes that could
Yes.
be at the time when it's worth the least and about to explode. So look into it, folks. Reach out to Vinney. We'll get his contact information here in the end. But before we go to the Quattro questions, Vinney, I want to roll back a
Yes,
little
yes.
bit to senior housing. So if we go backwards, what we were
Okay.
saying as well. So you said,
Uh-huh.
in senior housing, do you see that as development opportunity, or do you see that as acquisition operation opportunity?
Oh my gosh, amazing opportunities for the next 40 years. 40 years. Nobody can even touch it because we are aging. We are aging fast. As you know, 10,000 baby boomers turning 65 every night until 2031, where the last baby boomer will turn into senior. So there is a huge opportunity for independent living, 55 plus living, 65 living, 70 living. I'm in the assisted living and memory care side, where there is no doctors in my facilities, and even nurse I don't need, but we put one nurse there, and medications and everything, and caregivers. So residential senior assisted living is amazing. We do multifamily senior assisted living, about 94 units, not 200, not 400. We don't believe in elevators and all that stuff. So we do flat, ground only with courtyards and everything. So that is a place that I have a lot of passion for, to build them from scratch, because we put them in there, the spas, the salons, the high ceilings, because we could go high in a single story to like 20 feet, 30 feet ceilings, and all the way around, beautiful library I can think about. And then, of course, the movie theater, grand pianos and all, just like a resort. So that's what we are building, and we are still giving them at $4,400, $3,800 to $4,400 in Florida and in Virginia. And my friend told me today, $10,000 in Southern California. I didn't see
Wow.
the facility. And for memory care, she said $20,000. I couldn't believe it. I couldn't believe when they told me that. So there is a huge opportunity for everybody listening to us. You could take existing facility, small or big or mid-size, and then do some renovations. And it's a great money, profitability, but you're helping the seniors also. That's the big
Yeah,
part. Yeah.
exactly. And I assume the sentiment is similar in that, you are going, I mean, especially with regulation in this space, you will have to find qualified operators who can, effectively run the day to day and staff the property and have proper licensure and things of that sort. Yeah.
Totally, totally. We hire our own. We are vertically integrated in this case, so we don't hire a third party to manage our
Yeah.
senior assisted living. We do our own, but we hire executive director with the licenses and the nurses with licenses. So they're on our payroll, about 23 people,
Hmm.
per facility. And our chefs, deputy chefs, and our office managers. So the whole exercise manager, all that, right? So
Yeah.
we have done it for a few years. My partner has done it for about 10 years. So we have gotten into it for about 4 years now. So that's where we are. So we could even get outside company to manage it, or we could do it inside also. Yeah.
Yeah, absolutely. Well, folks, this has been an action-packed episode with Vinny, and as we come back to it, I think the takeaway is the opportunities are out there. What's happening with
Yes.
interest rates is real, and it will
Mhm.
subside. But watch for the opportunities it creates. Stick to the fundamentals, and consider diversifying into some of these assets that are really starting to take some of the market share. Senior housing, metaverse. I still don't understand it, but I think I'm starting to. The metaverse and more like that. So
We
this
didn't
is
talk about
fantastic.
Bitcoin mining. We didn't talk about
We didn't
Bitcoin
even get.
mining.
Let's add that in real quick before we go to the Quattro questions.
Yeah.
Come on, tell me
I
about
mean,
the Bitcoin mining
yeah.
fund you're doing. Yeah.
Oh my gosh, I'm loving it. We are mining Bitcoin right now at $10,000. Even though Bitcoin is 18,000, 17,000, whatever it is, we are still making profit. So that is another place. If you like crypto, if you believe in blockchain, the Bitcoin is not going to go anywhere. It's very depressed right now. 18,000, it might go to 25, 35, 500. Some people are saying it's going to go to 500 because there's limited number of Bitcoins, 21 million. And 3 million are lost actually. And so the mining can be done through supercomputers and good power source contracts. So my partner, Tang, you could reach me and, we just raised a lot of money for Bitcoin mining and we pay monthly in that one, in the Bitcoin. Anywhere from 3% to 7% is actually where our per month, per month. I don't want people to get too excited, but the thing is, please look at, I'm not selling any securities or anything, but if you want more information, reach out to Chad or myself. Yeah, yeah,
Yeah, very interesting. And if I
yeah.
could ask you a question on that, because similar to metaverse,
Please.
a cryptocurrency is something I
Yes,
always love when people more experienced than me talk about. So
yes,
we talk about the notion with Bitcoin that it is fixed quantity, right? It is not something that can be
yep,
hyperinflated, things of that sort. So what is
yep.
I assume mining is similar to mining gold, but if it is fixed, how does mining work?
I love it. I love it. Actually, mining, just like gold, is different mining. We call mining in Bitcoin miners are supercomputers. Actually, so instead of human, these are supercomputers. They are designed to solve equations. That's what it is. So these are mathematical equations because in Bitcoin, when the transaction happens, it gets recorded in many, many computers, as you know, across the globe. And mining is to solve and put this whole confirmation together. And once that locked, from little I know, lock is done, everybody gets rewarded X number of Bitcoins or a fraction of it. And there are limited amounts of monies or Bitcoins awarded every day. So it will take us 120 years to really find all the coins, through Bitcoin mining, which will be added on. It's 28, 21 million total. Nothing will go more than that. But it's the lost coins are being mined now.
That's very interesting. And so, folks, you think about that like gold. That's why it's been compared to gold, is it is a fixed quantity, but the
Yeah,
only way to find
it
more is
is.
to go dig it out of the ground. So similar analogy. There's a lot of analogies in the metaverse and in Bitcoin,
Yes.
so in cryptocurrency. Anyway,
Yeah.
well, Vinny, you're not off the hook that quickly, my friend. Before I let you go, I got to ask you a couple of Quattro questions. Okay, here we go.
I'm here, brother.
So, my
Yes.
friend, what is your superpower in business? What are you best at?
My superpower in business, people tell me, is my smile. They say, Vinny, your energy, your enthusiasm, your smile just grabs people, I think.
I think you're right because I find myself smiling more when I'm around you because you're always smiling at me. So it makes a lot of sense. So I would agree with that, Vinny. Let's switch it to the other side. We've talked about a lot of reasons why you're very competent and savvy in the investment world and you're doing so many great things. What is your biggest failure or mistake? And it could be in life or business. And what did you learn from it?
My failure has been being too nice and too naive, to be truthful. And as I was operating my properties, I got taken away, by the contractors and and a lot of those things. I would say my mistakes were when I didn't do proper due diligence, physical due diligence. And I learned a lot where the sewer lines problems or foundation problems and things like that. So biggest thing, and cybersecurity is another one. I think I kind of defaulted on that. Somebody hacked my account. I feel bad that why I did not take care of that. So my disappointments haven't been that many. I've lost some quite a bit of money, even in the now with the Ethereum and all that. Celsius, I lost money on that. They went bankrupt. And the other thing I lost was the Luna. I lost Luna on that one too. So I make decisions, but I don't really repent on it. I say, it's gone. Let's look in the future.
I love that. I love that. And you're not afraid to say, hey, I was wrong in that situation. You can't be right all
Yeah,
the time.
sure.
So that's good. That's good.
Totally, totally.
All right. Last two questions. One, you run a pretty awesome podcast and YouTube channel. Tell me about that. Where can the listeners find it? What's it called?
Totally. Actually, I wrote the book, Apartment Syndication Made Easy, and I would like all your audience and my audience to get it for free. Audio copy, digital copy, and you could just go to vinneychopra.com. That's VINNEY Chopra.com/free book. So you'll get the free book audio and all. And my podcast is the sequel to that, which is Apartment Syndication, Made Easy podcast on iTunes, on Stitcher, all over, on YouTube. And then we do lots of two live shows I do every week. One is Abundance Mindset with Vinney Chopra and Gwalter, my brother Gwalter Amarava, and that's on Thursdays at 8 a.m. every Thursday, Pacific 8 a.m. And then I do Friday, Vinny and Bo Show live every week again, and that's Vinny and Bo Show, plus the podcast.
Yes, fantastic. And folks, as always, scroll down. That will be right there in the show notes for you. So no need to write it down. Just scroll down in whatever modality you're listening to this on. And Vinny, last question. As you know, one of Quattro's 4 pillars is philanthropy. That's people, property, profit, and
Yes,
philanthropy. Tell me what
yes.
philanthropic ventures get you excited? Because you know what? I've had a lot of cases where people will actually contribute on your behalf after hearing it. So what are you into?
Oh, I appreciate you. I appreciate you. It's been really good. God has been great. For the last 35 years, we've been putting lots and lots of money in schools, in orphanages, in Africa, building and other things. Then also we have been doing a lot of to the orphan girls where they were young ladies and they went through college and now they are getting, what you call marriages and everything. Charity water is the other one which I really have believed in, and we do a lot of hand pumps, and tube wells in remote parts of the country, in India and in Africa, most of those. And then charity water is the clean water initiative I took over last year, helping out in 29 countries. And then in Cambodia and Vietnam, we are doing with the Lydia Foundation very nicely, helping them. Then, the other one, which I'm really, really passionate about, it's going to be launching very soon, is carbon neutral. Carbon neutral
Aha.
is the new initiative, and I'd love for you to, brother, join me also by planting trees and plants. Trees, actually, these are trees. $1 a tree. What? And we have figured it out. Neil Baba, you know Neil probably. Neil Baba and I are. He's the one who got me started, and I'm starting to build the foundation. along with Neil Bava, and we'll be doing that carbon neutral. If I think we plant $983 only give to this particular organization in USA, they plant 983 trees for us in our name. And when they become bigger, they will take care of all the carbon that I've given out in my travels, my home, everything to zero for the whole lifetime.
That's a pretty incredible one. So
It's
tell me
amazing.
what's that initiative called?
It's called carbon neutral,
Carbon neutral. Okay.
zero carbon dioxide. So
Yes.
what we find is that the trees, planting of the trees will really be taking the carbon dioxide in the nighttime and giving oxygen in the morning. So photosynthesis, I'm an engineer, so that really made sense to me when I learned about it. So by planting these trees, but the other part is when you plant them in other countries, they die also. So Neil, my brother, my friend, he did the research and found this, the tree planting service. It's a nonprofit, by the way, totally nonprofit, and the money goes directly to them. And $1 a tree. What? $1 a tree, you can't even buy seeds. And then they water them, they make sure, and they only plant in the USA and Canada. USA and Canada. And then they take good care of it so that they become big, big forests. So I'm very excited about that
That is
one. Yeah.
incredible. So, folks, look in the show notes. That will all be present for you. And you know what? You
Thank
can
you.
always tell real wealth from someone by their giving. You know, the fact that he is involved in so many I can't speak English, philanthropic
Ah,
ventures. Man, just so appreciative of
thank
all
you.
you do in the world, Vinny. Thanks for
Ah,
coming on the show.
thank
It's been
you.
a fantastic one.
Ah,
So many nuggets dropped. And hey, how do we get in touch with you? How do the listeners get in touch with you? They want to invest with you, learn
ah,
from you, listen to you. Where do we
ah.
find you?
Thank you. Thank you, Chad. I appreciate you, brother, and keep up the great work. I'm Vinney Chopra, Vinney, Vinney Chopra. I have an academy also where I teach, and my mastermind and inner circle. I teach every Wednesday, actually 1.5 hours. I love that. So we have online academy also. If you'd like to learn more, the tricks and all that, then of course you can invest with us also passively, be in the club, and we have a lot of deals. We come out diversified portfolios. And then books. My 2 books are already out there. Apartment Syndication Made Easy and Positivity Brings Profitability. My 3rd book is coming, which is Senior Living Investing Made Easy. So senior living is here to stay. So please dig into it. You will do really, really good because we need you. We need you to really operate, build, and help the seniors to get really quality time as that's their best time, before we all go up, in heaven.
I'm seeing a theme here with the Made Easy books. I love it. Well, Vinny, thanks for being on the show, friends. And folks, remember, don't forget, if you get any value out of this show, please scroll down, leave us that 5-star review and thoughtful comment. That is gold for this show and helps us increase our
Yes.
reach. You can also follow us via our parent company, Quattro Capital, on Instagram, Facebook, LinkedIn at Team Quattro Capital, one word, no special characters, or thequattroway.com. Until next time, friends, over and out.
Have you heard about the Multifamily Investor Nation Summit coming up on January 20th? If you've never been, it's a 3-day information-packed event for multifamily investors with over 1,000 attendees and over 50 speakers. Not only will you hear from experts about finding deals, raising capital, underwriting strategies, selecting markets, and so much more, but this year, our partners here at Quattro Capital are excited to be participating with 3 speakers at the event. Our amazing Kim Wendland will be speaking on the often neglected subject of asset management, how to make the machine hum. While our most interesting man in real estate, Maurice Philogene, will be speaking on how to leave your corporate job for a freedom lifestyle. I personally will even be speaking on the topic of how to perform due diligence on multifamily assets before you purchase them, and the not so common things to watch out for. Go to mfinsummit.com to grab your ticket and use promo code Quattro to get $100 off of your full access pass. Whether you are new to multifamily investing or a seasoned investor, you do not want to miss this event. Join Team Quattro at the Multifamily Investor Nation Summit. Visit mfinsummit.com, promo code Quattro. That's mfinsummit.com, promo code Quattro.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.